let me shortly explain how this series works. Yeah boy over here started investing in a new brokerage account on the 5th of December 2022. The account is funded with real cash and has the purpose of building up a value investing track record over time. And here on YouTube I am sharing everything with you all on a roughly bi-weekly schedule. And I mean everything. All the transactions, all the good, and especially all the bad. In today's episode, you can first expect a totally new value stock in this portfolio. Second, we'll talk about why I sold 30% of my Tesla position. And third, we will talk about the huge mistake that I made that I am using as clickbait in both the title and thumbnail. Now, let's get into it with first, the new addition. Okay, so just a couple of days ago, on the 21st of February 2023, I bought 15 shares of Clearfield at roughly $60 per share. That roughly translates to a 6.6% portfolio allocation at the time of making this video. Now, why did I buy Clearfield? The shortest synopsis I could possibly give is this. Clearfield's share price got massively fucked over the last couple of months because the company raised a huge amount of capital by selling new shares into the market. And after that event in December 2022, well, the company trended down a whopping 53%. The company went from a frothy valuation right here to now being what I would consider cheap. Why is it cheap, you ask? Well, the company is trading for a trailing 12-month price to earnings ratio of about 16, which is well below the average in US equity markets. So, based on how much the company earned in the last 12 months, the company is cheaper than the average. That's what the company is guiding for 25% growth in earnings, which is well above the average. So, if you believe the management team and their guidance, you are effectively buying above average growth for a below average price. But then, of course, this is just a very small sliver of all the information there is to know about Clearfield. For example, I didn't even tell you guys what the company actually does. LMFO. So let me know if you want to see a full analysis video on Clearfield. Now, with that said, it is time for why I sold Tesla. Okay, so your boy sold 3 of the 10 Tesla shares in this portfolio for an average sale price of $206 per share. Why? Well, for that we do have to go back to my original thesis. Basically, I called out in this video that I believe Tesla to be undervalued at about 50% around the $100 per share mark. Valuing these hyper growth style stocks like Tesla is always tremendously hard. Just 5% more or 5% less growth will change your valuation significantly. So over time, I've become very cautious investing in these hyper growth style stocks. Companies can look extremely attractive, while in fact they might be overvalued. And yeah, I am looking at Palantir and my past self. What I'm trying to say is, at $100 I knew for almost close to certain that I was getting a phenomenal deal. But now at roughly $200 per share, the risk of holding Tesla has increased significantly. The company needs to execute near perfectly on all of their plans to grow into that $200 valuation. And for that reason, like all the fancy suits on Shark Tank would say, I am out. Of course, not even close to entirely out. I still hold 7 Tesla shares at about 10% of the portfolio. But if valuations remain frothy, I will continue to sell and I will continue to de-risk. So that is why I sold a significant part of my Tesla position. The company just simply grew toward its intrinsic value. So hopefully you get my reasoning. And if not, please do not hesitate to ask it down below in the comment section. But now let's talk about my massive mistake. And honestly, I feel like such a freaking baguette for what happened on this one. So basically, your boy Stein wanted to buy another 5,000 shares of Base Resources, which I have done a full analysis video on, by the way. Link will be in the top right corner. But now the mistake. My broker was being a little bitch. I put in the order and I got a freaking spinny peach ball loading animation kind of thing. And instead of being a patient saint, your boy went ahead and refreshed the page. Classic mistake. So I put in order again, 5,000 shares at 12.5 GPX. Damn, peach ball again. So Mr. Patience is my biggest virtue, reloaded the page again. Third time is the charm, your boy thought. Boy was I right. Boom, I bought 15,000 shares instead of 5,000 shares. Those orders I thought I cancelled went through, and basically I got scammed real good. Very nice. And now I'm basically stuck with a 20,000 share position on a very illiquid stock on the London Stock Exchange. And I mean very illiquid. Remember, I hold 20,000 shares while the daily average volume on the stock exchange is just 200,000 shares. Basically what I'm trying to say, I cannot really sell these shares on the short term. Summarized, I accidentally bought 3 times as many shares as I wish to do, and now I cannot really sell without setting my prices ridiculously low, because the liquidity is so darn low. And basically I now have 2 options. Number 1, take the loss, which is a pretty good option, or number 2, I could continue just holding the shares. Act like this is always the plan after all. Then I will get a this morning confirmed massive dividend coming just next month, and then I will sell when my defined catalyst play out. Now, my mama raised no bitch, so I'm going for the second option. Jokes aside, I am actually really bullish on base resources, so I certainly do not want to sell for a loss. However, buying this many shares was still a massive mistake, and I have learned my lesson. I will be more patient with my broker interface. And with that last one explained, we have actually covered all the transaction between the last update and this video. Now there's just one more thing we should talk about: the comparison. Of course, your boy, Mr. Stock Picker Extraordinaire, is overperforming the S&P 500 by about 11%, which is a phenomenal return on the short term, by the way. And we are actually up about 11% compared to just holding cash. Both of these returns are since the 5th of December 2022, when we started this portfolio. Additionally, to give you a bit of context, the portfolio has earned about 1,200 euros on a total deposit of 12,000 euros. That, while dollar cost average into the S&P 500 would have lost about 90 euros instead. What I'm trying to say is, this portfolio is kicking butt, specifically the butt of index investors. Get wrecked. Now, time for a classic YouTuber disclaimer. While I am a registered financial advisor in the Netherlands, I do not have the legal capacity yet to give anyone investment advice. Therefore, this video and any other video on this YouTube channel can never be taken as financial advice. I cannot be held liable for the losses you make while trading according to my opinions. Please do your own due diligence. And with that said, thank you so much for watching. I love you all. Peace.